Hello guys, welcome back to my channel. Today I am continuing with the topic of depreciation. As discussed earlier with the one question, I am continuing with the next statement over here. Now I gonna tell you about how the depreciation is to be calculated when the rate is not given, and how to calculate the depreciation rate also, and how to prepare the machinery account. Once again we will do the same. So here in the question, what is given to you is purchase a second-hand machine for rupees 96,000 and spend rupees 24,000 on the cartage and repairs and installation. So I have already told you that when you buy a machine, very rare it happens that you can get that machine and start working on the same. It is not like you can say a mixer which you can plug it and then you can switch it on and make use of. In the business, when you buy a machine, it needs a proper installation, and till the time it is properly installed, whatever expenses are done on the machine are to be included in the value of machinery. So here the machine value total would be 96,000 which he spent on the second hand machine. Then for cartage, because it was second hand, for its repair and then for its installation, total he spent 24,000. So how much was the cost of machine to him? That is rupees 1,20,000 here. Now suppose that if I am saying suppose, why? Because journal is not asked over here. So if I have to make the journal, then first year what entry would be passed that machinery is coming into the business. So machinery account debit to cash account or bank account. Generally, because the purchase value of the asset is higher, we presume that payment is made in check, right? So here a total value of the machine which was purchased is for 1,20,000 rupees posted over here, right? Now he asks you in this case that calculate annual depreciation when rate of depreciation is not given to us. Sorry. What is given to us is estimated useful life, that is 4 years, and after 4-year usage its residual value is rupees 20,000, right? If I ask you a simple question over here, there is one container having the biscuits in it, right? I'm supposing it to be that here are 20 biscuits in this particular container, right? If it is to be consumed in 4 days, then how much would be per day consumption of biscuits? That you will say that 5 biscuits per day would be consumed to finish this biscuit container. So the 4 days, every day we are having 5 biscuits from this container. In the similar value, he says this 1,20,000 rupees asset is to run for 4 years, not days, rather years. So how much should be depreciation as per this? That is 30,000 rupees. Right? Easy to way over understand is, if the asset value is 1,20,000 and it is to be used for 4 years, then what would be the amount of depreciation annually? That is 30,000, that this asset is reducing every year by rupees 30,000. But there is another point given that the residual value after 4 years is rupees 20,000. That means this 1,20,000 assets, when we will use it for 4 years, then after the end of the 4th year, it will have a scrap value of rupees 20,000. That means the asset on which today I am spending is rupees 1,20,000 will be sold at a valuation of 20,000 after 4 years. So in this case, this asset is generating 20,000 revenue after 4 years. So how much is to be reduced here is 1 lakh rupees over 4 years. How much would be the depreciation amount annually? That is 25,000 rupees. So what is the formula for calculating depreciation? That is asset value less is what? The scrap value or the residual value, right? In the question I am given the scrap or the residual value, whatever you are provided, you have to take the same and divide it by the life of the asset, the useful life of the asset. Here in the question I was given the asset is of rupees 1 lakh, 20,000 total value, scrap value is 20, upon 4 years annual depreciation is of rupees 25,000. So that means at the end of first year, what would be the amount of depreciation? 25,000. And the journal for depreciation would be, because depreciation is a loss, depreciation account debit to machinery account, that is with rupees 25,000. At the end of first year, asset got reduced with rupees 25,000. At the end of second year, same journal would be passed because machinery will be used and it would be reduced by 25,000. Then third year also, then fourth year also, and we would be passing the same journal. What is the journal here? That is depreciation account debit to machinery account. Every time we gonna reduce it with 25,000. So this journal again would be repeated 3 times, right? So we are having 2 times here, more 2 times would be there. After that, this would be sold at a residual value for 20,000. So fourth year end we will be receiving an amount of rupees 20,000 after selling the machinery as a scrap. So what we received is cash. When the old machinery is sold, cash is received. So bank account debit to machinery or cash account debit to machinery account with the scrap value of the asset, that is 20,000. This is the simplest version that how depreciation is to be taken in journal. But we are asked to prepare here is machinery account. How to prepare the machinery account is, the machinery account is a real account. Its debit side is for plus, its credit side is for less, and here we divide into the column date, particulars and amount, and same way date, particulars and amount, right? So this is the way we have to prepare over here. The debit is for plus, that means if machineries are purchased, it would go on the debit side. If there is a depreciation or a sale or a loss, it would be credited to the machinery account. So first year starting, at the starting of, because date is not given to me, the starting of first year, what he has done, he has purchased a machinery for rupees 1,20,000. So we pass the journal in the machinery account, we won't write the word machinery, we will write the opposite word, that is bank. So to bank account, this is to side, this is buy side. So to bank account 1,20,000 goes here, right? And he says that at the end of first year, how much depreciation is to be charged? We have already calculated, that is rupees 25,000. So the depreciation charge 25,000. We put it on the credit side. Why on the credit side? Because it is reducing the asset value. Asset was of 120 used, so there is reduction in the value of asset by 25,000. Or you can see in machinery account is not to be written, so by depreciation account rupees 25,000. When machinery was purchased, it was 2 band. When machinery is credited, there is a loss on machinery, we write by depreciation. Now, over here see, what is the account total? That is 1,20,000 is the highest value out of 120 and 25. We will write the highest value among both the columns in front of each other. Okay. Then how much this is less? This is only 25,000. This is not 1,20,000. So 1,20,000 minus 25,000. How much is the value of asset left over here at the end of first year? That is 95,000 rupees. What? If you are not getting, just go back to my example which I took over here. That if a container is holding 20 biscuits and on the very first day the biscuits consumed are 5, then 20 minus 5, how much are left? 15. The same way, 1,20,000 is the machinery value, depreciated with 25,000. You can say it is used value 25,000. Then with how much it is left at the year end, right? It is not after 1 day, it is not after 1 month, rather it is after 1 year. After 1 year, when we used it with 25,000, what was the balance carried down? Balance CD, that is 95,000. Now, when you have portrayed it like over here, to balance brought down second year starting, right? Always taking second year starting because here the years were not mentioned. So the starting of the year, how much value is there? That is rupees 95,000 here. Okay. So the balance with which we carried is 95. The balance with which we brought next year is 95,000. At the last day, if you left in the container is 15, at the beginning of second day, the container would have only 15, right? So here, now again at the end of second year, how much depreciation is there? That is a gain of rupees 25,000. Now, same way, if 15 biscuits are there, we consume more 5, how much are left? 10. So here, 95,000 was the value of machinery, 25,000 is used. How much is left? That is with 70,000. Balance carried down. Balancing figure, BF stands for balancing figure. 95,000 was the total of account for this year. You have to see that have been done. You will not see the past year here. What you will see, 95,000 less 25,000. How much is the value here? 70,000. So the total is 95,000. The last year was done and double line was made. That means this is not to be seen now. That is finished. Same way double line is done. Now this year is not to be seen. What to be seen at the end of the second year? The brought down to the starting of the third year. That is to balance brought down. How much brought down? 70,000. We will use this asset again in the third year. At the end, we will pass it by depreciation account. How much depreciation? That was 25,000 annually. Annually 25,000 depreciation is fixed here. That is not changing. So at the end of the third year, the total of the account was 70. This 70, that is double line not to see, 70,000, 70 less 25,000 by balance carried down. Balancing figure is 70 minus 25. You will get 45,000 here, and the total would remain 70,000 in front of each other. This should be in front of each other with the double line. Now, the last year, fourth year, when he said that starting of fourth year, we were with the balance brought down of rupees 45,000. With this balance brought down, at the year end, we charge the depreciation because we used this for the fourth year also, 25,000. Now, what happened? At the end of the fourth year, it was scrapped. He has written, when asset is scrapped at the end of the fourth year, with what value it was to be scrapped? That is 20,000. So, we sold it for 20,000. The old machinery is sold. So, machinery is credited. What's coming in? That is cash or the bank balance with rupees 20,000. So, by bank account, I told you in the machinery account we will not write machinery, we will write opposite account. So, opposite account is bank. By bank, how much value was scrapped? That was 20,000. So, now see, 45,000 total is here and 45,000 total is here, and nothing is left, nothing is the balance carried down, nothing is the balance brought down. So here the machinery account is closed with the nil balance because he scrapped the machinery at the end of the fourth year. So nothing was left in the machinery account. Now coming along, annual depreciation which we took here, 25,000, that shows that depreciation was fixed with the value of rupees 25,000 annually. This annual depreciation was fixed. So this method of charging depreciation is actually known as straight line method, straight line, or the fixed installment method. We charge the depreciation by which method? That is fixed installment. Every year depreciation was charged with rupees 25,000. This is known as fixed installment or straight line method. There are another methods also, but in your syllabus there are two methods. We will discuss the second one in the next. So here one thing more is asked, that is calculate the depreciation rate. How to calculate the depreciation rate? In the normal questions you would be provided this rate. 10%, 20% you would be given. Here the depreciation rate is not given. So how to calculate the depreciation rate? That is depreciation divided by asset value multiplied by is 100. Likewise, if I ask you that you scored 450 out of, that is 500, then how much percentage you scored? You would say 450 divided by total into 100. Same way, depreciation divided by total asset value into 100. So how much was the depreciation which we charged in this question is 25,000. What was the asset value? That was 1,20,000 into 100. The rate here comes in points, 28.33%. So the rate of depreciation was 20.833. So it is 20.833%. So that's how the depreciation is done in case of the machinery account. Here this is the simplest version of the machinery account with the straight line method. No purchase of further machinery or no sale of existing machinery was done, which we'll discuss in the upcoming videos. Thanks for the day. Accountitude, like, share and subscribe. If you have something to ask or some particular topic to ask, kindly give the particular topic name in the comment section. Thanks for the day. Keep scoring.